All right. Hello, Karen, Lynn, and Melissa. Thank you for joining us today. Les, thank you so much. We've got an exciting day ahead of us. Richard, pleasure to see you again. Rojo, I just like saying that. Hi, Rojo. That's cool, Rojo. Rojo, is that a nickname, full name, short name? Would love to know. Gotta go by spots, spots, same kind of thing. Let's see here. We got Deborah, Julie joining as well. Vicky, thank you so much. We will just be getting started here in a moment. We are actually going to be going live on Facebook and YouTube again, trying to get all fancy with it. And I would love to hear in the comments from everybody. Are you excited to hear a whole bunch of letters today, like our favorite PPP and ERTC and all those kind of things? First two initials, the last two initials. Love it. Rojo, it works. I'm going to totally remember it now. That's awesome. Angela, great to see you joining us also. And let me get my other side of this set up. We shall get this ball rolling. All right. There we go. And almost there. There we go. Hello, everybody. Thank you for joining us for this week's episode of Weekly Sessions. I am happy to introduce Fred Peck, one of the members of QB Community Live. Fred, come on down and join us. We'd love to hear more about you, please. Awesome. So this actually came about. I was chatting with Fred in the group, and he started to share with me some of his knowledge about, what was once my favorite topic, but now my least favorite topic, all the letters of federal money. And he thought it would be a great idea to kind of be able to talk about the evolution of these dollars and, what's available, what's been available, what's available, what can happen, I guess is a good way to say it. But before we dive into all of that stuff, Fred, would you do me a favor? Would you introduce yourself to everybody? Tell us what you do and where you're from and all that kind of stuff, please.
Great. Thank you very much, Matthew. It's really an honor to be here with you and to be with everybody on QB Community Live. I've been a CPA for roughly 16 years, and I grew up in Princeton, New Jersey, and worked my way west, and got my CPA license when I was living in North Idaho and working in Spokane, Washington. And I left employment about 1.5 years ago and decided to start my own CPA firm, called it Kingfisher Financial. It's a benefit corporation, which is a choice of entity. It's taxed as an S corporation, but officially it's Kingfisher Financial PBC. PBC stands for Public Benefit Corporation, which means that I'm all about earning a profit, but also doing things that are good for the community and good for the environment. So that was a lot of fun. November 2019, launching Kingfisher. And little did I know that we had a pandemic just around the corner. So I leased an office in Spokane and was building my client base. And then everything happened March of 2020. And so I've just been working from a home office ever since, and working with clients all over the country and some internationally. And I'm doing a lot of work over Zoom, just like we're interacting today over Zoom, and it all works. So when I started out, I was helping small business owners with financial reporting and helping keep the books, pro advisor for QuickBooks, and doing some tax work. And then the pandemic hit, and I recognized, okay, there's a great need out there, and I'm gonna figure out how these programs are gonna work, or are envisioned to work, or are gonna evolve over time. And so that's been my working life for the last 1.5 years.
That is exactly why I wanted to bring you on. It was the fact that you recognize that you can help your community by diving in and doing this stuff is, I'm a huge supporter of that. So thank you so very much. Really, really appreciate that. I'm going to real quickly, I'm going to start sharing my screen just real quickly, but then why don't you get your presentation queued up and I'll hand it right back over to you. Does that sound good?
Sounds good.
Awesome. And let's see here. Yay, wrong thing. So I did have some fun where our live stream was not working right off the bat, but we got it rocking and rolling. It's up now. So we are live on Facebook also. I did want to actually thank Corpay for this month. Corpay is actually helping to sponsor QB Community Live this week. They're going to be doing a live stream for us actually in about 2 weeks, and we'll be able to hear a little bit more about the app, everything else within the community itself. So just wanted to say a bit, give a shout out to Corpay and say thank you very much for your support to Corpay. Really appreciate it. So with that, told you I was going to get right back to you. We're going to go right in today's topic. I'm going to let you take control here of our session for the day. And I'm watching our different areas. If people have questions, feel free to ask them in the Q&A. It definitely is a big help to me if it's there. But I'll be watching on the live streams as everywhere else so we can get those added in. All right.
Very good. Are you seeing my screen now?
Yeah, we're seeing the PowerPoint version. If you want to click to the slideshow aspect and we'll be able to.
Yeah, I've got 2 screens, so if it's okay, I'm just gonna leave it as is. It's easier on my end.
You bet. You got it. So the evolution of stimulus money.
Yeah. Okay, just focus on the right side of the screen and we'll go through the slides. So this is me. That's my logo of the firm that I founded and my status. So a timeline. I like to look at things in perspective. March, actually it was the 27th. I put the 26th because that's my wife's birthday, so I always remember that date. But it was late March and CARES Act was passed. And then in June of last year, the PPP Flexibility Act, that was huge. And we're going to talk about that. Consolidated Appropriations Act, another key date just before the end of the year. And then middle of March, new administration, we got the American Rescue Plan and the PPP Extension Act. This was a very big deal. This was just pushing out the deadline to allow more people to apply for the PPP. And here we are, August 6th, and the arrow is pointing in the future, and we'll see where things lead as the days go by. So
plenty of money to be still printed, I would say. There's plenty of money to still be printed, right?
Yeah, there you go. At least in the United States. So here's the outline of what we're going to cover. We're going to start with free money because that's what people tend to be most interested in. That's certainly true of my clients. So if a PPP loan is forgiven, that's free money, although you had to work for it to get the forgiveness. The employee retention credit, that's free money, although you have to go through the work of applying for it and understanding all the rules around it. SBA Shuttered Venue Operators Grant,
Yep.
That's been out there for a while, has not been exhausted yet. State and local grants, we'll talk a little bit about that. EIDL advances, something dating back to March 27th of last year, but we'll talk a little bit about that. And then RRF stands for the Restaurant Revitalization Fund. That's been exhausted, but it may come back to life. We'll talk about that briefly. And then money that's not free, you've got the equity financing piece and you got the debt financing piece. And we'll talk about SBA funds that are available, borrowing. And then the Main Street Lending Program, just a brief mention of that, which is no longer an option. But that was really what triggered today's event, was because last week I got to attend a webinar with the Small Business Administration, the administrator Isabella Guzman, together with the Vice President Kamala Harris, and they were really advocating the EIDL loan option. But that's when I posted on the Facebook group, and that's how Matthew and I got to talking, which led to today's event. So circling back, let's look at PPP.
My least favorite letter in the alphabet now.
The triple P. So you can't apply anymore. The deadline has passed for first or second draw. So now it's all about loan forgiveness. And
Did you find a lot of your, like the people that you were working with, did a lot of them go with second loans, second draws?
a lot of my clients were hesitant because of the affirmation that people had to make last year for the first draw, and again that it's an economic necessity, that economic conditions make this loan a necessity. So a lot of my clients, the finances are doing better, business is picking up, and so they're reluctant to go that route, but some of them did.
I'd love to hear in the comments from people watching, both again, Facebook and Zoom, which of all the different funding sources, tell us in the comments, which ones were your clients using? Maybe it was all of them. What did you find most people were using? And I'll follow back up with some of the answers to tell you about that as well, Fred.
Yeah. Okay. So it's all about forgiveness now. Time is of the essence for first draw. So what happened is people were in no hurry, and every week I would attend the AICPA update, the town hall. It was great for continuing education because normally you've got to pay to get your CPE credits. So there's a lot of free sources out there, but the AICPA, they always made you pay. But once the pandemic hit, they said, we're going to be with you every Thursday afternoon, and it's you're going to get CPE credit and it's free. And that has been the case to the present, although they went to every other week after a while. In any case, they were saying consistently, don't be in any great hurry to apply for forgiveness for your first draw loans. The rules are changing. It's a moving target. We're waiting for guidance. We're waiting for the next IFR, interim final rule from Treasury. And then like
the names
June,
of those were just insane. The interim,
Yes.
At one point in time, they almost came up with when it was going to be the PPPP, I think is what they almost did, right? But it was bad.
Well, it's an interesting thing of being a tax preparer and then looking at the guidance on PPP, which is not an IRS program, it's an SBA program, but both IRS and SBA are under the umbrella of Treasury. And so they read like tax returns. If you look at the Form 3508, it's like a tax return. Answer these questions, then go down 3 lines or 4 lines, depending on what you answered. That's very similar.
Yeah, I did a whole worksheet on that thing, and it took forever to try to, basically the whole point was to make like a fillable PDF as a calculator, and it was complicated. You had to start at the end and move forward to really get the answers you needed.
Yes, well, it's funny you should mention that, because once the CARES Act was passed, I did that. I put together, in a matter of minutes, a spreadsheet for calculating your forgiveness amount. And that was back when it was 75% payroll, 25% non, and and I just sent it out to people, and people were delighted. Like, oh, okay, I'm thinking about applying for this. Now I've got a tool, so I know how to track my forgiveness amount. And then the next ruling came out, and the next ruling came out. Yep. I just took it down. And then
after the third iteration, I stopped doing it too. It was like, forget that. Real quickly to add in, so some of the responses we're hearing from people. So PPP has definitely been winner. It's let's see here. We've got Julie was saying that working on second PPP loan forgiveness now for a client. Tanya loves Corpay and PPP. Vicky was saying PPP and ERC. Lynn was saying PPP first and second rounds. Julie was talking about PPP and local foundation grants. That's actually even been helpful for me as well. EIDLs. And then Karen, thank you for adding an extra twist on this as well. I'd love to hear this. In Canada, rent subsidy, temporary wage subsidy, emergency wage subsidy, and CEBA loan. And then Sandy also had a whole bunch of PPP EIDLs, like 2 of them were getting additional $350K in the EIDL since they were kept at $150. Personally, they don't need it, but this, so and Tanya says that she loves PPP, not Corpay. Just kidding. It was both. So anyways, sorry. Just wanted to fill that in.
Okay, great. So the AICPA was saying in their weekly or bi-weekly town halls, don't be in any hurry. There's no rush until June. And then in June, they said, you're probably hearing from your lender. And if you haven't heard recently, they're going to start pressing you to get that forgiveness application in because if there's no forgiveness application in, then the deadline might arrive for principal and interest payments to begin. And that gets messy, because if you start making principal and interest payments and then the SBA, then you submit your forgiveness application, and then the SBA forgives it and pays off the bank, and then the bank, the debt is written off in full, paid off in full by the federal government, and they owe you money back because you made those principal and interest payments. And that's just messy,
Yeah.
and they don't want to get into that. So that's why lenders started saying, please get your forgiveness application in. And so then the AICPA said July is the month. So here we are 5 days after July. So depending on when people receive first draw loans, it may or may not be an issue. But
We got a major influx of calls asking about like figuring out forgiveness, trying to get it done. And it was all like the August 4th date. And I'm like, you're calling me on July 31st on this? Like,
yeah, this is not a simple form. 35.
No.
So in any case, forgiveness for the first and second draw loans, some lenders may use the new SBA portal for loans under $150,000. So the SBA sends me a email a couple times a week. And last week it said the new portal is going to go live on August 4th.
Okay.
So I went to the link and tried it this morning so I could report to you all, and the link did not work.
That's common practice. So we're good. We should see it in about 2 years. It should be good. I'm embarrassed to admit this, but when did it go from the 50 to 150 approval? It used to be like the 3508S. If you had loans that were under $50,000, you could do that 3508S and just be done quickly. But now they upped it to 150, right? How long ago? Do you remember how long ago that was?
No, I don't, but I just know that it has been changing on a regular basis. And it was, the 50, under 50,000, between 50,000 and 150,000, and then anyone over 150,000. But the application differed per lender. So some of my clients were saying, my lender is saying that I've got to create a username and a password and do the application online.
Yeah.
And others were saying, my lender's saying, print the form and fill it out and scan it and upload it. And so it's been all over the board.
Yeah.
But the most alarming thing that happened to me was I had a 3508S client,
Okay.
submitted everything through the lender's portal. And of course, the form says, here's the list of documents that you need to submit. And here's the list of documents that you do not need to submit, but retain for 6 years so that if you get audited, you have them on file. And then the lender got a letter from the SBA saying that everything on that list of documents you do not need to submit, you need to submit them within 5 days. And if you fail to meet that deadline, the loan may not be forgiven. And so like they got the letter on day 2, and I got the letter from the client on day 4.
Oh.
And so I checked in with the AICPA, and they said, just get those documents in. They said they're doing it in this nationwide. Doesn't seem to be any pattern to it. There's no rationale. It's probably a random sample. But what they said, you don't have to submit. And then it said you do have to submit them. And so we raced, we got it in, and they came back forgiven in full, but it was a fire drill.
One of the things I've said, and then I know we probably have to move to the next part of it, but I've always been telling everybody from the very beginning, even if they're saying you don't have to submit paperwork for this PPP stuff or the supporting documents, you better create your packet now, have it ready, because you need to save it. Just because they still have the right to come back and audit you if they wish to. And good luck trying to remember this stuff in 3 years. Like, this is not going to go away anytime soon. So create the packet. You need to pay somebody to make sure you've got it. I don't care if you paid 20,000 or you got 2 million, make sure you got that packet and it's saved aside and ready to go.
Yeah. And what I've been telling clients, it's not just the documentation of your payroll and non-payroll costs, but it's also documentation of what was your rationale when you applied for the loan and you said economic conditions make this necessary.
Yes.
The AICPA says, like, go print the day that you applied, print what was in the news. you know, and what
Great
the news
advice.
was like
Yes.
doom, you know, it was doomsday.
That's smart.
Yeah.
And write down the narrative. You're right. You need to write the narrative down that on December such and such, we got locked down again and we had to lay off X number of people. The more you write those notes down ahead of time, that's your safe harbor exemption. That's going to be so important to protect your rear in the future. So great advice.
Yeah, and I'm telling people, look what the CDC was quoted in the news. Look what the OSHA, federal agencies, what were they saying at that time? And they were saying you cannot have people coming into your office if they are not wearing a mask and not practicing all the social distancing and things that really prevent conducting a business, a normal course of business.
Oh,
Okay,
all right.
that's all I
So
got to say on this slide.
as we move to the
Actually,
next
no.
area, I want to make sure we have enough time to get through all your stuff here, right? So
Yeah, but this third point is very important. So,
perfect.
you know, on a personal level, what I did was tell clients last fall, like, you want to get this done and taken care of, no problem. The Congress extended the 8-week period to a 24-week covered period. So you have got it made. There is no question that you've got 100% payroll costs far in excess of your loan amount. So just get it in. Don't even bother with the documentation of your non-payroll costs. You have them, but don't even bother. So some of my clients did that. And then Congress came back and said, you can apply for the ERC. You're eligible for the employee retention credit, but you can't double dip. Yeah.
Yep.
And so, you know, that's a regret looking back. They would have been better off taking the time to document the non-payroll costs. But for those who have not applied yet and are looking at the ERC as an option, it's to your advantage to maximize your non-payroll costs up to 40% and minimize your payroll costs, take it down to 60% if that works for you, and then you can potentially get a bigger employee retention credit.
Especially stuff like in the owner payroll, you want to have under PPP because owner and family related, you can't use for the employee retention credits. So if you put those as part of that first 60%, you can optimize. This is the hard part. This is where the strategy comes into play. And there is not a calculator in the world that can make this super easy, unfortunately. But it creates big money. So good points.
Yeah. So the other comment that the AICPA made on their town halls was a really good point. They said for PPP, there is a fixed amount of money. For EIDL, there is a fixed amount of money. For the employee retention credit, there is no cap, and the money is not going to run out. You know, it depends on the federal budget and the federal deficit, but there's no point where the IRS is going to say, that's enough, we're not going to accept any more ERC credits. We've given out enough money for this program.
Interesting.
Yeah.
I know that they just recently made some changes to the ERC, but I'm sure we'll kind of talk about that in a bit. So you got forgiveness data here. What do we got here?
Oh, this is just to point out that if you go to sba.gov and click on PPP, they'll tell you the numbers of how many loans have been received, how many loans have been funded, how many forgiveness applications have been funded. And the last look, it was about half of the applications that have been submitted have been forgiven. About a third of the dollar amount that has been submitted has been forgiven. So there's a lot that has yet to be forgiven.
Is that, I'm asking a hard question. Is that number that half because others haven't submitted, or is it because there was that many people that were misusing funds?
I was
Not sure.
I don't, yeah.
No comment. Don't want to get in trouble. We'll find out.
Yeah.
Okay.
But I was really interested to see this interview by the AICPA, Eric Askerson, who's been taking the lead on all these presentations, the Thursday town halls. He interviewed a friend of his who was working behind the scenes at the Treasury to implement PPP. And this gentleman said, yeah, you know, I got pressed by the media and by getting all the money out there as quickly as we didn't that allow more fraud to happen? And he said it was a juggling act because it was an unprecedented amount of money and that people needed desperately, and we had to have controls in place. But, there's a balancing act there. And they said, well, we understand that someone went out and bought a Ferrari with their PPP money.
More than
Just went
one.
out and bought a new car. And he said, that's right. And you know how that person got caught? Because the lender that made the loan said, this doesn't look right, and reported it. And so that was corrected.
The problem is they
So,
don't get the money back though. That's the challenge.
right.
Right. So the fraud happens. I mean, they got to go joyride the Ferrari for a bit, but the money's gone. And the taxpayers, there's like, we still leverage the country for that stuff is the hard part, but
Yeah, it's
I
true.
digress. So
Yeah. So I don't know the details behind that, but I just want to make the point here. If you go to sba.gov, they've got a lot of data there. In fact, I just downloaded a huge Excel file an hour ago that gives all the EIDL data for the EIDL advances, the EIDL loans. I haven't poured through that yet, but it's a good resource and it's right there.
I remember Hector was talking about this. We did some webinar stuff together, and it is you've got a huge public knowledge, who got what money, right? And you could utilize that to market your services. And there's a lot of question whether that should have been released or not. So it's been a while.
Yeah. Yeah. True.
ERC, this is the big boy nowadays, right? Are you
Yes, it
doing
is.
a lot with the employee retention credits?
Just starting to, because everybody's been focused on PPP and there's no urgency around ERC unless there's, cash flow is driving it in terms of timeliness. But so much is changing, just like it did with PPP. The rules, are just coming out, and new guidance today. And at first, you're not eligible if you got a PPP loan forgiven. You couldn't apply for ERC. And then in December, they opened it up. And then it was, you could do a retroactive for second, third, and fourth quarter 2020, and first and second quarter of 2021. And then the American Rescue Plan extended that to third and fourth quarter of this year. So it's out there, it's available. The rules differ for 2020 and 2021. The amount available per employee is greater in 2021. And in 2020, it's got to be government shutdown, full or partial, or 50% reduction in revenue when you compare the quarter to 2019, same quarter of 2019. And then in 2020, they changed the 50% to only a 20% decline in gross receipts.
And the amounts that are available are per quarter, where for 2020 it was for the whole year, basically, right?
No, it's per quarter because it's based on a 941. So it's per quarter in 2020 is my understanding. Yeah, because I asked that question on an SBA webinar and they said, yep, it's per quarter. It's just, you're amending a 941 and the 941 is for a quarter.
For some reason, I'm pretty certain that basically it was up to $10,000 for all of 2020, up to $10,000 per employee for the entire year. So you basically have a couple quarters combined. That at 50% would be the 5,000. But in the latter in 2021, it started to become up to, you got 70% for up to 10,000 per quarter per employee. But we can reconfirm.
Oh, okay. I see what you're saying. What the cap is.
Yes.
Yeah. But the application is quarter by quarter.
Oh, yes. Sorry.
Yeah.
And then Sandy, real quick, I want to just comment out to Sandy that she had something that said a client with a PPP issue through B of A got 11K. Now B of A said it was overfunded and capped the forgiveness at 8,600. Bank refuses to do anything about it, so the client has to pay back 2,400. Any remedies you can suggest? Sandy, reach out to me after this. I need to know like more context behind it, but let's, I don't know if I have an answer, but reach out to me after and let's see what I can do to help. So please, sorry to interrupt you again there.
Yeah. Okay. So yeah, just the history, and it applies for all 4 quarters. Here's some good guidance for Treasury. We'll make these slides available. So this is a good website to look at for Treasury regulations. And Gusto has a good summary, a payroll service, giving good guidance on ERC. I like what they've been putting out. So
he's been doing some amazing stuff as well. both, I mean, all the companies are busting their butt on this stuff, of course, but ADP, Augusto, they really stepped up. That's for sure.
Yeah. Good, good. Okay, on to the next slide. So here's a good webpage, IRS website, how to claim the employee retention credit. And they talk about the two different forms, 7200 and 941X. So 941X, if you're amending what's already been filed, and 7200 if you're claiming the credit prior to the 941 being filed. So those are the URLs are there in the slides, and I hope people find that useful. And on to the next topic, SVOG. So again, free money. And so this is for operators of theaters and public venues. The restaurants had that separate funding. The rules were different when comparing SVOG to RRF. But this funding has not been exhausted. It's a rather complicated application because to be eligible, you have to create a SAM registration with the federal government, and that requires a Dun & Bradstreet registration. So there's some hoops to jump through, and there's reporting requirements too. I've attended the SBA's webinars on that, and so they're definitely got some hoops to jump through, which is probably why there's funding still there. And the Restaurant Revitalization Fund was an easier application process, and that's been exhausted, but we'll talk about that in a minute. Next one is state and local grants. Okay, so I've got clients in Idaho who got the Idaho Rebound Cash Grant. So this was an interesting ride because it was CARES Act money. So the federal government put money into PPP, they put money into EIDL, they put money into the stimulus funding, the individual taxpayers, they put money into the unemployment funds nationwide, and they also put money into state and local governments. So states, counties, cities had funds that came from the US Treasury under the CARES Act, and in a lot of cases they've used it up, but in some cases they haven't. So clients of mine in Idaho got the Idaho Rebound Cash Grants. That was kind of a wild ride because the Idaho legislature didn't decide if that was taxable or not until the middle of March. So business tax returns were due March 15th, and they made a decision on that a week later. So I just had clients extend. I said, we don't know yet. And, there was this debate of, well, look at what the IRS is doing with PPP forgiveness. And, there was a big debate over that, whether that should be taxable or not. And so we should make this taxable, lobbyists were saying. So in any case, that money has been used up. But here's another website that I wanted to share, National Conference of State Legislatures, and they provide a database here where you can search by state of what federal funds, stimulus money went to each state and what it was earmarked for, and you can find out if there's money in your state that's still available. So that's just
really, really helpful. So I'll make sure when we're done with this on the Facebook feed, everything else, that we'll put this URL into the comments as well, because that's gold right there. Thank you so much.
Yeah. Okay. Very good. And then EIDL advances. The funny thing is written right into the CARES Act, March of 2020, that this is an advance on a loan. Okay, it's debt, but it does not have to be repaid. Okay, it's not debt. So it's a grant, but you can't apply for the grant money unless you apply for the loan. So I don't know if you were dealing with clients that first week of March, the last week of March and early April, when they opened up the website and the floodgates were open and everybody was applying. And so what I did was ask clients and friends who were applying, what was your number? Because when you hit submit, you got a confirmation number. I said, I don't want to know the last 3 digits, but I just want to know the rest of the number. And I put those in a chart and I charted it. And so I could tell when they hit 1 million people. that had applied. And the chart had an interesting slope. It had a steep slope up, charting the number of applications over time. And then it leveled off. You know, it kept sloping up, but not at the same rate. And that was the day that PPP loans became available.
Well, what was interesting with a lot of this, because actually it was the EIDL loans is where we first jumped in, and we tried to do a whole video on YouTube showing people how to go through the process. Then the whole process on the SBA broke. We had different SBA offices around the United States calling us and asking if they could use our video to demonstrate to people how they could do this whole thing, because there was no information, no guidance whatsoever through anybody else for it. It was crazy.
It's amazing that they were calling you.
We got lucky that we hustled it. I stayed up super late and made a video. So, but it was neat. And hey, it allowed us to help a lot of people last year.
Yeah, I just did screen shares, just Zoom sessions, lock it down and walk them through. I said, okay, now, this is Zoom and it's secure. So they're going to ask for your social. They're going to ask for your bank account number. And people would say to me, Fred, is this a hoax? I mean, this could be. I'm like, nope, this is the federal government. And this is, I was on webinars with senators and congressmen, and they're saying, small businesses are the engine of the U.S. economy. We got to keep this engine running. And this is how we're going to do it. We're going to put money in directly into people's bank accounts through the SBA website. And so I was telling people, you can trust this. This is the federal government getting money to you so that you can keep your employees on, that you can keep buying product and selling it and staying afloat. Yep. So all of this people are familiar with. The funds were exhausted in 2020. Now the targeted EIDL advance. Now this is really interesting. Screenshot from a couple of days ago. So it's talking about the EIDL advance and it says apply here. You can't apply for a targeted EIDL advance at this point. They're in don't call us, we'll call you mode. And the AICPA said, as far as they know, the funds are exhausted, but yeah, SBA hasn't taken it down yet. So if you click apply here, it takes you to apply for an EIDL loan, but it has a phone number. So I called the phone number yesterday and they said, you're only eligible for a targeted EIDL advance or a supplemental targeted EIDL advance if you submit an application before December 27, 2020.
Interesting.
But then on their website, there's a lot of talk. If you go to SBA and you drill down on EIDL, targeted EIDL advance, they start talking about funds that were sent to the bank that the bank sent back to them.
Yep, we saw that too. Yep.
Yeah, so that says to me that there may be funds available if money is being returned, that they might start funding. But as of July 29th, SBA announces on their website that targeted EIDL advances funded are 2.6 billion, and the supplemental targeted advance is 1.2 billion. So that's current from just within the last week.
We've got Vicki Henry who's asking a good question. She was wondering how to return an EIDL advance for a company that wasn't necessarily they weren't eligible for it. Happened to be a beauty salon that had 4 contractors applied and received $5,000. How would one go about returning that money? Any idea?
The thing with the SBA website is that this was the federal government's solution to pushing an unprecedented amount of money through a system that they had never come close to that much money in a year, let alone in a matter of weeks. And so it was very computerized. It was very impersonal. And so if you want to have a conversation with someone about an EIDL advance, I would say go to your local SBA office.
Yeah. So Vicki, same kind of thing. If you want to reach out to me, there's other variations to this, such as, did they get a PPP? Did they not? There's so many other questions I would ask. And then the real answer is going to be, if you're trying to return it, you're going to spend about 5,000 years on hold with the SBA to try to tell somebody about it. But why don't you connect with me after, and we can lament on how painful it's going to be, if you'd like, so we can figure it out.
Hey, Matthew, it looks to me like I've got 7 minutes to get through the rest of the slides. So we're going to.
You can do it, my friend.
We're going to just roll. So there's information, current supplemental and targeted advance. Again, it's don't call us, we'll call you from the SBA, and you've got to be in the right area of their map, and also other hoops to jump through. Here's a really important thing, because it all depends on the email. If you're eligible and you got an email and you deleted it or you can't find it, they're saying right here on their FAQs, call this number or email, send an email to this address. So that's a resource for anyone who thinks they might have been invited but haven't pursued it. Restaurant Revitalization Fund, recent news, 60 billion is proposed. We'll see what Congress does with that. Okay, so out of the free money, we're into money that you would report on your balance sheet, not your income statement. So equity investment, angel investors, crowdsourcing. There's lots of creative options out there, but we're not going to dive into the detail. We're going to go right on to what you would report on your balance sheet as debt. So this was Main Street Lending Program. I had clients who were interested in this in 2020. Turned out to be for mid-sized businesses, not so much for small businesses. And it wasn't as popular as the SBA. It was the Federal Reserve making these funds available, but that ended in January of this year. So MSLP is not an option at this point. And then debt financing, conventional loans. If you are thinking of borrowing and not going through the SBA, then a lender is typically going to want to know, want to see your financial statements and talk about collateral. And the best place to start there is typically with a financial institution that you already have a relationship with. And then on to the SBA. Okay, so a Zoom call last week. And here's Kamala Harris, here's Isabella Guzman, and they were interacting with all of us nationwide. It was funny, they had the camera focused on Kamala. We couldn't see Isabella. She gave her presentation, it was just audio. But they were emphasizing the importance of federal government supporting small business for the continuing economic recovery, and emphasizing EIDL loans. So these are the slides. They just sent me an email this morning saying go to our Facebook page. The whole hour and a half is archived there, including these slides. And so they're talking about EIDL loans that are full term versus the micro loans, whether they require collateral or not, application process over here. So all of this is available online, but it's a source of readily available funding that's not free, has to be repaid. But the example they gave was, okay, so if you're borrowing $10,000 as a small business and you're going to pay that back at 3.75% interest over 30 years, you got a $47 a month payment. So if you really are strapped for cash and you can afford servicing that debt over the long term, here's an option that they're recommending. And then they talked about the other conventional SBA loans, 7A, the 504, the micro loans. And that's where you would go through a traditional lender, not through the SBA website. And so that presumes a banking relationship with someone at the local level. And there we go. We got 3 minutes for any other questions.
Look at that. See? So what do you think? I'd love to know just your opinion. Do you think there's going to be additional funding sources moving forward? Are we going to see more money to help businesses at this time?
It's a juggling act that the federal government is doing because they want to stimulate the economy. They want people to stay on the payroll and not be drawing unemployment. But the federal deficit is at unprecedented levels. And so the money that you were talking about printing at the beginning is an issue.
The funny money. Yep.
Yeah. And so I'm hearing economic forecasts from the AICPA and others saying, the economists are saying that inflation is inevitable. Maybe later this year, maybe not until next year, but anticipate significant inflation. probably not in the long term, but
Yeah,
very likely in the short term. So the more the government prints money, the more that impacts inflation. So the conversation now that I'm hearing is about infrastructure. And the vice president and the
they're spending
administrator
their way
at
out of
SBA,
this, is what they're
we're
trying to
talking
do.
about that too, that, we're investing in infrastructure to make sure that you can get your goods to market. We're going to improve the roads and the bridges and the communication systems, but also high-speed internet. And
I
that's really
support that
important
one
to
big
small
time.
business. Yeah.
I think high-speed internet's a absolute infrastructure thing we need to handle. When I think about it, I think of my good friend Shannon. She deserves to have good internet. I'm telling you that. But so real quickly, Linda Baker added on, I had a client that returned EIDL not needed. We got a loan coupon instructing us to pay at www.pay.gov, and it said select 1201 borrower payment form. You need to set up an account with your loan number, and then you can repay it online. You'll be charged interest for the time that you had the money until the time you paid it off. So hopefully that helped out with your question, Vicky. And Linda, thank you for that extra information. Really appreciate it. So, all right. Sorry. Yeah, I inflation's an obvious. It's definitely, I think it's already happening. I think we'll see more of it, but we're making it through. We're almost to the other side, fingers crossed and all that stuff. So any last comments or things you wanted to bring up before we close it down? I'm going to share what we've got coming up in the next couple of weeks, but any last things to bring up?
No, just feel free to contact me if you have any questions about what we've talked about, what I've presented. The slides will be made available. You can find me on LinkedIn at Kingfisher Financial PBC. There are a couple other Kingfisher Financials in other countries, so put that PBC at the end and you'll be sure to find me. Also, I'm on Facebook, Kingfisher Financial PBC there as well. And feel free
I'll put all your contact info on our website as well. So once, in case everybody's not familiar, once we're done with we finish each of these episodes, we put them on the QB Community Live website, special page, put all your contact info, the slides, everything as well. So make sure that people can share. We'll make sure people can connect you there as well. So as we get ready to close, I just want to let people know this next upcoming week, we're going to have Intuit, Ted Callahan will be joining us. And I think you guys will want to be around for this one. There's going to be some interesting information shared. I'll leave it to that, but definitely you want to join us with Ted for next Thursday at 2:30. The following week after that, we're going to be doing a live demo with Corpay. They're going to be talking about their application. I'll be able to ask some more questions about it and share that with you guys as well. And then the week after that, we will have Joe Woodard on also, and we're going to be talking about the Unstoppable Advisor. We're going to be discussing what it takes to be that unstoppable advisor. Definitely think it'll be a great episode and looking forward to have people tune in for that one as well. As a reminder, again, we've got all this stuff is all available on the QB Community Live website with our calendar. And if you have other events you would like to add onto the calendar, that's open to do for everybody. We'd love to have you contribute towards it anytime. So at this time, we'd love to wish everybody a very successful week. Thank you for your time today, Fred.
Thank you so much.